Hi everyone, my name's Sam Kerr. I'm the Senior Financial Advisor at Nucleus Wealth. In this video, I'm going to show you how to use the property calculator. You can run lots of different scenarios with lots of different assumptions to see some different outcomes from investing in property. You can also compare investing in property to renting, and you can also compare investing in property versus investing in shares. So I'll run you through a quick scenario. In this scenario, you choose a house and located in Melbourne. You can choose any of the capital cities there. We're going to put $1 million purchase cost and we'll put $200,000 deposit to avoid lender's mortgage insurance. Then we've got the rent that it'll produce there. We just use the median yield for the capital city selected. Then we've got the different economic environments. So just hover over each question mark there to see the different underlying assumptions. We're going to use moderate growth for this scenario. Then click next. On this page, we see all the different ways that you can calculate the returns from property. So again, just hover over these little information bars to get an understanding of what inputs are going to go in there. So for this one, we're going to use mortgage cost to rent. So this assumes that when the ratio gets really high, so it's really expensive to have a mortgage, more people will prefer to rent than buy. And the consequence will be either property prices will fall until it becomes more attractive for people to buy, or the Reserve Bank will lower interest rates. So that's what we're going to use for now. You can see we've got all the different 10-year average, the forecast, 30-year average, and you can also adjust the ratio here to whatever you think is going to be prevalent in the future. Then you hit next. Then on this page you'll get the result. So you can see the blue line here, this is the actual scenario. And then the grey line here comparing if the property had no debt. This is the gain and the losses over the 10 years. So you can see the initial 200,000 investment, you've got the entry costs, stamp duty, legal fees, etc. Then you've got the rent received, property costs, maintenance, etc. Then we've got the interest costs. Then we've got the growth in the property value. And then we've got the exit costs as well, giving you your total net return. So you can actually come down, you can see the core economic assumptions here. You can see the property assumptions here. So if you want to adjust any of these, if you want to change the inflation rate or wage growth, or any assumptions around the property, the income, or you can see here body corporate rates. So it's really a really comprehensive calculator that leaves no stone unturned. So then you can also compare renting to buying. So then you can adjust the after tax return if investing elsewhere, and then we hit next. So this will give you the outcome here also. You can then compare investing in property to investing in shares. You can choose Australian shares, global shares. Then there's lots of different underlying assumptions here as well. You got the price to earnings ratio, the growth of shares, and then you've got all the fees associated with investing in shares. And then it's going to give you an outcome depending on the underlying assumptions. You can share this calculator with a friend, and you can also book on a call with us. We're happy to chat about the calculator, or if you want to discuss your personal investment situation, we're happy to discuss that as well.